I think today in travel, online travel is a massive industry. Travel globally is a $1 trillion industry. The airlines are having a fantastic year this year. Many people think that's because of lower oil, but in fact, oil, as you know, has been rather high this year. That industry has been transformed. In fact, we were discussing that Warren Buffett is now the largest investor in the travel economy in the United States, owning 10% of the big four airlines.
That's a vote of confidence.
A tremendous vote of confidence. And as you know, Berkshire is not a short-term investor. They look at the structure of that industry having fundamentally changed. For years, they said it was the worst place to invest, and now they're the single largest investor in the airline industry. And then you mentioned Priceline and Expedia. We now have about 1.5 billion global hotel rooms that are booked by those two companies alone. And so we continue to see very predictable earnings growth, very predictable top-line growth out of these two very large internet e-commerce companies.
But are those two names you want to hold in an environment where the economy continues to deteriorate and perhaps the consumer pulls back on spending on travel and leisure?
Right. So there's a secular curve, which is how are consumers changing their behavior, and then there's a cyclical curve. What we know is more and more people are electing to use our mobile devices, online apps, to book their hotels and to book their travel. At the same time, we also understand and realize that in a cycle, there may be less spending on airlines, on car rental companies, on hotels. But ironically, if you look at 2008, 2011, Priceline and Expedia actually accelerated in those cycles because hotels become more dependent on them to distribute their products.
Looking to the private market, you're invested in Uber and Airbnb, but given the stock market volatility, we may see some of these companies push out their date that they go public. Is that a concern?
Well, first, I think both of those are excellent companies. They're both continuing to execute very well. Uber's still growing over 40%. An interesting fact about Uber, it's larger than all ride-sharing companies in the world put together. They've also demonstrated that they're more than just a ride-sharing platform. They're a platform for food delivery. In 3 years, they've become the largest food delivery business in the world. And so I think that they will continue to push forward on the IPO track. I expect that they'll go public in the first half of next year.
But a $100 billion valuation, that's a tough sell for investors, for Uber.
Well, I think that, ultimately investors want to buy growth. The thing about Uber is it is a truly global platform. From Delhi to Paris, from Rio to San Francisco, if you want to get a car, you're going to get it with Uber. And so the potential, the runway, the TAM that's available in a company like Uber, and remember, it's not just ride sharing, it's going to be global food delivery, both from restaurants, from grocery, freight, payments, loyalty. This is a very important global platform.
Speaking of global platform, Amazon, now in bear market territory. A lot of these high growth tech names have come down. Do you see opportunity? Is now the time to get in?
Yeah, great question. Well, listen, I think it's a healthy correction. The causes for the correction, we can debate whether it's rates going up, whether it's global trade fears. But the reality is the multiples of these companies were near recent highs. At the same time, we've seen some deceleration in their top line. And so to me, it's a healthy correction. I know when something goes down 10 or 20%, it feels like bear market or feels like a disaster. But we're seeing opportunities. I've commented on your air about a position that we've been building in Facebook. We think there's a really interesting company still growing at over 30% and trading at a single-digit multiple of EBITDA when you look out a year or two. So long as you have a 24-month or a 36-month time horizon, then I think we're starting to see opportunities. But I don't see anything that's corrected so much where I would light myself on fire and say, today is the day, you must buy it today.